I'm like, what's the dream of? What's the hope in? What's the doubt for? Live to no end. This is living. The life I've been given is a gift. If I'm a living, I'ma live it to death. So what's the dream of? What's the hope in? What's the doubt for? And live to no end. This is living. The life I've been given is a gift. If I'm a living, I'ma live it to death. Yeah.
All right, welcome everybody to the Living Hope Agency call. I could not be more excited to have our special guest here today, Mr. Adam Marquis. Adam is 50 families away, maybe a little bit less now since he made the post, from helping his 1,000th family in 14 months in Family First Life. Super excited to have him on the call. Adam, how you doing?
Better than I deserve. Thanks for asking.
Yes, absolutely, man. So, hey, where are you located?
West Seattle, Washington.
West Seattle, Washington. Tell us a little bit about yourself, how you found out about Family First Life. You have a professional background. Maybe what about Family First Life was attractive to you?
Back in the days when, people were posting their bank deposits, that's what got me. This lady was posting them and I was thinking, what is she doing? My gosh. And I always ask people to, what wall is your back against? For me, it was a divorce and I had to kill it. I was the healthcare CEO. I did integrated medicine, behavioral health and addiction, whole person care. Loved it. Worked up to that from the ground up. Been working since I was 10. Just, became the manager I wish I had. And getting rid of narcissistic managers was my specialty. And turning around companies from dying to healthy culture. And I promoted more women because women work harder than men most of the time and to prove themselves. And I'd watch and say, yep, here we go. You're going up. So when I saw all these posts, I was like, wow, let me see about this. And it was actually my last plan. And then I was like, okay, passed the exam on 3/24/21. Got my license 4/4. I talked with Brian Rowlands. I said, oh, Brad's done 1,000 families in a year. And I said, where is he from? He's in Seattle. I said, I'm moving there. So I moved from Long Beach, nowhere, Washington, to the city because there's 4 million people. And I was like, if I'm going to do this, I'm going to location. I got to be around enough people to get shots on goal for this. So it's what I did, the 419. And then I started in the field at 426.
And you've been primarily in the field. You've just kind of dabbled in telesales, but you're mostly in the field, correct?
I'm a road warrior and occasionally a virtual Viking. Yes.
Okay. I love that. Road warrior and our virtual Vikings. So for you, did you come out initially out the gate swinging as hard as you are in terms of premium? Did it take you a second to ramp up to the level that you're currently at where, now you've had multiple months where you've been able to help 100 families? What did that trajectory kind of look like for you?
Telling it like it is. Here we go. So I talked to Brian Rowlands. I'm like, how do you do 40, 50, 60, 70 families a month? He says, you spend $2,000 a week in leads. I had 20 grand in my name. 20 grand. And I said, all right, I'm going all in. So I did 2,000 a week for the first 4 weeks. Then I went to 2,500, right? And then I kept it there. And then I went up to 3,000. And then in the fall last year, I was doing about 3. And then I bumped it to 3,500. And now I'm doing $4,900 a week in mortgage and mailers. So it comes down to crisis of belief, do you believe in yourself, right? Because if I don't work, it's going to be really awful if I don't go out and do it. So my thing was a minimum of 40 appointments. I want to see them in person. For me, I'm more effective. I just am, because people communicate in 3 ways: their words, their gesture, and their spirit. And I can't see it through all video. A little screenshot is not enough for me. Because I can't leverage things in the home and I can't really sense where they are through the video as well. Does that make sense? So like when I'm there, I want to be in front of people. And then my secret sauce was pick 5 producers, 5 that are ahead of you that match your style and are doing where you want to go, and get 5 producers and get 5 minutes with each of them. Trust me, we get outreach all the time. 5 minutes. I said, I'm not going to waste your time. What do you want me to do? And I just do it. Because what's the point? Why should I don't know what I'm doing. This isn't my industry. I was like, I just need to do it and practice practice till it becomes permanent, not perfect. Practice till it becomes permanent. And I'm all about like, I'm all in because I want to fail really fast and crush the learning, right? I want to accelerate and I want to go up fast. So that's why I was like, I need leads. I need lots of appointments. I need to go out and fail a whole bunch and win too.
Who were the 5 producers that you wanted 5 minutes with initially?
So I went to the 331-21 conference in Vancouver. I was told go. I went, and so I listened. I really liked Matt Smith. Matt Smith's really good because he didn't go 500 miles an hour when he taught. That was frustrating me. A lot of people go so fast because they're lost in their own enthusiasm. God bless you, but slow down. So for my whole thing is now I want to do video, which I'm doing today, and then word track it, and then do both, right? Because I can't keep up with 500 miles an hour. Maybe you can, right? But that was Matt Smith. It was Brian Rowlands, Mark Mead, Brian Mendenhall, Brad Allen. Brad Allen became my number 1 guy because he was on so many of our trainings. And when he trained, I would memorize it. I would write it down, right? And then he would give me like word tracks and I'd try them out and they worked. And so I just kept chunking, like, you know what I mean by like chunking, like do this at the beginning, middle, and the end stuff. And now I've so I'd say this: scrap all your thinking you need to do it in your own way. And I would say imitate and then later innovate, right? Because if I innovate too soon, I don't have the right ingredients. I'm just trying to follow the recipe for people that are doing this. Does that make sense? It's like, why would I go and sit in the desk of an engineer and act like I know how to be an engineer? I don't. So maybe that's a long answer, but it's truthful.
No, absolutely. No, I love that. The imitate, then innovate. So you got a new agent out there who is trying to do it their own way. And I think that a lot of people, one of the biggest mistakes that they make when they're first getting started is they try to do it their own way for too long before they, and I don't want to disclaim this. There are plenty of people who've done it their own way. They've learned from mistakes, they've figured it out, and they've made it in the insurance industry. But you can learn from 2 different ways. You can learn from mistakes, or you can learn from mentors. Mentors are going to help you avoid those mistakes. And like Adam talked about, make that learning curve that much faster. So I absolutely love that. Talk to us a little bit about just the mindset, because working that many appointments, spending that much in leads, you kind of have, I try to be as politically correct as possible. You kind of have a little bit of a crazy mindset. And that's not something that everybody coming into this business is going to have. Talk to us a little bit about that mindset. Where does it come from?
It comes from sheer grit from my dad. I come from the woods of Maine. I've been working since I was 10, right? My dad was a top salesman because he worked his tail off. My mom was an executive director because she worked her tail off, and I'm both. So what do I do? It's just like anyone here ever cooked anything or assembled anything without the directions? How'd it go? Was it great? Did it? Maybe. Most of the time, not, right? And what do we not like to do? We don't want to follow directions because, pride's really big. And I want to do it my way, Frank Sinatra. So it's kind of like, what recipe works for the people that are doing it? And then I just follow the recipe as much as they would tell me and much as I could get, right? So here's the truth. The first 6 months are hell. If you're really working hard, it sucks really bad, especially the first 90 days, the 3 months, because your brain is rewiring. And as you hit month 2, your brain's freeing up because it's habituating. It's automating what you're doing. And you can layer on stuff. That's what it was every month. New stuff. Oh yeah, because I'm freed up because I'm getting used to it, right? It's just like an athlete. Anyone here ever tried a new diet or health or fitness? It sucks when you start, but why wouldn't you do it all at once to get over the pain, or rather than drag it out? That's how I was. I'm like, I'm just going to go all in because I have to kill it, man. I got 2 households to pay for, lawyers, and they want their money. So I better make it. So for me, my first month, I did 38 families. Second month, I did basically, I got to say it correctly, 70 families, almost 70. Third month, 87.5 families. Fourth month, 84.5. So I was just going. I was doing CRM leads. I was doing, the instant internet, new internet life, 1 month old. Those were it right there. I was just trying a little Facebook one here. And then I was like, oh, someone said, mortgage. And I was like, oh, I don't know how to do mortgage. Final expense, that's easy. Hey, do you want to be buried or cremated? And then I listened to Jake Conan at Road to Hall of Fame. And he said, hey, do you want a celebration of life? So now we just went from 15 to 20,000. And he says, hey, do you want to be able to have people go to your event who can't afford it and have it be catered? Now we're at 25,000. Yes, upselling. So again, always being a student of the game, right? For me. And then I was like, okay, mortgage. I didn't want to do it because I didn't understand it. I didn't know about mailers. But then I talked to Steve Giordano. Everyone knows Steve? I got literally 5 minutes through Messenger with the dude. Yeah. And I said, what are you doing, man? And he says, I'm doing mortgage. And Brad was doing mortgage. And so was Jonathan Porcina. These guys are doing 1,000+ families a year. I think they know what they're doing. So I was like, I'm going to do it. So I went all in mortgage. And I switched to Hall of Fame leads right after convention. And that's when I hit 119. So I don't know what you want me to, I want to share how I hit, where I went from Sapphire to Ruby to Emerald. I'd love to share that, but when you want me to.
Yeah, please share that next. I'd love if you could just give us some perspective on, so guys, he's talking about, he got into mortgage and there's a handful of different mortgage options out there. There's buy per lead, which is the most popular option. And then there's something called a mail drop. Could you explain to us, for anybody who doesn't know, what is a mail drop, and, how do you do mail drops right? And, how could you potentially do mail drops wrong?
I'm not sure about right or wrong. I'm sure about being all in. So for me, what I did is I said, okay, well, I'll just say what I do now. I got up to the point I'm like, oh man, how am I going to go from Ruby to Emerald? Because that was my goal. I wanted to hit Emerald. So now I spend $4,900 a week on 7,000 mailers over 9 counties. So if anyone's familiar with British Columbia or Vancouver, like a J, all around Puget Sound. So for me, buy per lead is like when somebody, like fills out the form, maybe it's through FFL or whatever. I just do blanket. Here's all 4 options. So they do new purchases, refinances, line of credit, reverse mortgages, right? And then, I don't know, I really wanted to lead. I'm big on leading from the front, leading by example. And my goal is how many people are actually reproducing themselves, right? That's how I wanted to, that's how I was in healthcare, is like reproducing the managers and leaders, taking managers to leaders. So now it's like, I got one lady, Letitia, she's going to drop 10 grand a week on leads. You think that 5's much? I'm going, that makes me stretch. I'm like, wow, 10 grand. And I got another guy, Damien. I'm trying to reproduce myself. That's the key. And then I love what Jamie and I were talking about earlier today about, not being so far ahead that, they think I'm the enemy and shoot me, right? So it's kind of like right now, I'm looking at ROI. So every day I do my stats, right? So my stats is percent conversion, right? From lead filled out to the type of thing sold. Here's what I want to say to you, man. It's Matt Smith's right. It's about app count in the home. So let's say anyone ever gone to a home and they're like, I don't want it. I don't want life insurance, right? No one's heard that, right? No one's ever had that experience on this call, right? Everyone's kind of looking at me like, what? Right? Has anyone ever had that experience? Raise your hand or put a 1 in the chat. Anyone ever won? If you've had that experience, let me know. All right, cool. Hands up. I love it. Grateful. Thank you. Thank you for participating. Awesome. Guess what? Pivot to FIAs, fixed index annuities. Hey, Brad Allen, does the market make you nervous? Listen. I said, what if I could show you something where you never lose a penny and you gain half the market gains, and when the market goes down, you stay level? Would that interest you? Game changer. And then I said, okay, hey, look, if you're really healthy, you get all your money back. Would that interest you? Yeah, CBO 100. Bam. One of the best policies out there, in my opinion. I said, what about if you don't have a lot of retirement? Let's do National Life Group, Index Universal Life, build retirement. Show them the illustration. Bam. And I go, okay, what about your legacy, your kids, grandkids? We could start an IUL, whatever. That's what it's changed in the last few months for me, is that's where it's kind of like a tree. You plant a tree and you do branches off of it with the family, like, hey, and then because then they're a good referral source. We loved you, man. We got people, does that make sense? Rather than always buying leads, you get people that's my goal now, is get people to refer me because they love me. And by the way, when I take a picture, if you see my picture, I'm not saying, hey, dude, smile. Yeah. No, I'm like, hey, because when I go through the interview, I'd happily do what I do with you if you want, man. But I love the people. Most of them are hard. Some of them are hard to love. Let's be honest, right? But what I do, if they are awful to you, that's their own shame they're projecting onto you, because I'm a trauma recovery guy. Yep. And once you just hear it out long enough, because nobody's really validated them probably in a long time, they actually like you. If you can hold through it, trust me. I've had people curse me out. Anyone had them curse you out? Right? Oh yeah, it's fun, isn't it? It's hard. But if you hang in there, most of the time, if you hung in there and they've come through, yeah, right? Some of them, not all the time. But those people, when they do, they realize how much you love them. So what I would say is be an agent that cares and get the premium breath out of there. Because if they like you, they trust you, they like the product, they like the carrier, they like the whole field, they're going to buy for you. Because when value exceeds price, like Matt Smith, they're going to buy, man. Sorry, I'm just going where my heart goes, and my apologies if I'm going off the rail, man.
I like it. You're making my job easy. I don't have to say much. Talk to us a little bit, and we're gonna start with schedule, and then we're gonna see where you take us.
6 days a week, 8 to 8. I work 80 hours a week. Pick up, clean up on Sundays. I do new agent training at 5 o'clock because we're doing with the Wills team. We're tailoring it to Zach Tradowski's prep for the week. We did it from Tuesdays. Now we're on Sundays, which I like. And then I do what I call administrivia, policy conservation. Oh, this client missed this, policy it's going to lapse, and you get back to him and all that stuff. So nobody's done this, but I want to do it. Jamie, maybe you and I can do it.
Okay, let's
go. The life cycle of a new policy. If anyone uses it, I coined it. You're welcome. Life cycle of a new policy. When you get to the halfway point, now it's conservation, keeping it on the books, because 30% falls off. That's the sweet spot. And then there's the life cycle of a new manager. I want to put together a leadership development institute like I used to do before. It's not even happening. I want to do that. Let's do it, dude. Let's do it, man. Jamie and I are getting. I love it. Let's do that. And then the life cycle of an agency, right? We get comfortable. Even I do. I get comfortable. When things get comfortable, I don't like it. I don't like it because I'm not on the edge of my seat leaning forward, right? I remind myself, hey, this is something you like, right? When you sit with a client, notice if you're sitting back or sitting forward. Lean forward again. Get into it, right? Because when you sit back, you're just showing like you're just kind of present and not really checked out. Lean in with them, man. Right? I joke. I try to get them to like me, right? And if they don't, they don't. So here we go. You ready? Jamie, how's the day treating you so far today, brother? And I talk just like this, like with man and yeah and all of it, because I'm real. How's it going today, man?
Not a great day.
What's happening, man? You all right?
Long day at work.
Long day at work. Well, I'm grateful we can meet. It's an honor and privilege, man. So, first question. What motivated you to meet with me today?
I was just I filled out the card just because they sent so many of them, and I thought I had to. Okay. So can I just be perfectly honest with you, even if you don't want to hear it? That's old school Sean Mike. I'm going to give credit as I go. When I call it out, I'm giving credit. Okay. Say perfect. I said, man, is it true that in the event of your death or disability, you don't want the equity to go back to the lender? Yeah. Would you say that's fair? That's fair. And draw pictures with your hands, guys. It seems silly, but it works. Go, Jamie, this is the lender. This is you, man. The lender doesn't care about you. They care about money, right? My goal is to put you in a better position like this.
so that you can protect that payment and the equity and up to the full payoff. Does that make sense?
Yeah.
Okay. Like I said, and in these policies, they're life and disability, right? They're level. Use your arms, man. I swear to God, it works. Let's look at my numbers if you have a question. Do this. All right. And then you take, and three riders. I go, look, if you get there's a level benefit, level coverage, level payment. And I go, if you get a terminal illness, 12 months to live by a medical professional, God forbid. That's Marquis talk. God forbid. Throw it in there. They love it. Sometimes it backfires, whatever. Moving on. Critical illness, heart attack, stroke, cancer. All right. Temporary or permanent. I said, what are you going to do when you burn up all your work leave? And I go, chronic illness, 2 or more activities for daily living you can't do for yourself, like, walking, bathing, eating, meds. Okay. Terminal, critical, chronic illness. You get one of those after you approve, we can apply with medical documentation. I step in, we do a claim, and you can drain the policy. And then some of them you can build cash. See, I'm showing up, growing. They like this. Remember, it's emotion. You bring out emotion with visuals, right? And I go, or we can get your money back. I said, what are the two biggest fears that seniors have?
Running out of money and dying.
Grateful. Exactly. Outliving their money. Exactly. Right. Number one. Number two is stepping from their home into a facility. Isn't that true?
Definitely.
Right. And I used to receive you folks involuntarily, and it ain't pretty. I'm probably pretty sure you want to, if you want to get carried out of your home, I want to make sure that we do that. So for me, it's doing a bridger policy in their 70s or 80s, right? Whole life, final expense, covering payment, pain points. I said, what is 2 things you always wish you had more of, Jamie?
Time and money.
Bam, and a policy does it, bridger, boom. Easing the pain so you can focus, family can focus on family, I'll focus on finance with getting the money. So, and then I go, and they go, well, how much does this cost? And I go, okay, great. This is not a burger and fry drive-through. I said, price equals current age, current health. I'll assess for that in a minute. Plus, what's affordable up to your budget? See how I go up? I go, did you have a budget in mind, Jamie?
No, I didn't really have a budget. I mean, I definitely don't want it to be too expensive.
Okay. And then my goal is to figure out how, assess for health, here, your budget to get you the most coverage. Okay. So let me just ask you a question. So I think America, I devised this, I made it up. So this is me. Okay. I said, Jamie, this is you in the last 10 years, man. Any overnight hospitalizations?
No.
Okay. Any surgeries or accidents, man?
Knee surgery and a hernia.
Okay. Do you have any trail of opioids?
No. I mean, they gave me like 3 pills to get through the knee surgery the day after.
Okay, perfect. I said, any COVID? See, I'm doing this. Any COVID with complications like respirator or overnight hospital,
No.
breathing issues?
No.
Awesome. I'm trying to rule stuff out, Jamie. Okay. And so any current medications?
Taking a cholesterol medication and just vitamins.
Excellent. Any medications you discontinued in the last recent years?
I think I used to take something for heartburn back in the day, but I stopped taking it.
Okay. Totally normal. These are all normal to me, right? Any history, heart attack, stroke, or cancer in the last 10 years?
No.
I just did some field underwriting right now. I'm already thinking he's going to be hit. We're going with America. That's a win. Does that make sense? Because if you look at what I did for 10 years, you look at the medical lifestyle, and I said, Jane, okay, look, I said, here's what we got to get through. The whole intent is to figure out, why is mortgage protection important? You will be my mission statement. Then we do it. And then I go the options, the 4 options, covering payment, equity, half protection, whole protection. Thank you, Sean Mike, for the slide deck. And then do the finance inventory. And then I do no more than 15% over discretionary money. Brad Allen, because out of that, they need money for fun and they need money for rainy day. We all do, right? And so now we have a budget. Jamie, we figured out it's $150 and your mortgage is $300,000. Well, and Jamie, let's just say Jamie's 50. Okay, well, I'm not going to do all $300,000 at face amount because it's too expensive for his budget. So I'm going to half it, do $150,000 death and disability, and add an accidental rider in America, $150,000. We still get to 300, but it's cheaper. Brad Allen. So that's what I do there, right? Or layer on a Muga.
So here's a question for you. So when you know that the person's looking for, let's say 300,000, but if you show it to them, pretty much they're going to show you the door, and you know that you need to show them a different option, but that's what they want. How do you make them want the half coverage, the equity protection? How do you change their mindset? I can obviously tell you the million ways that I do it, but how do you lead them towards something that they didn't originally think that it was?
Well, exactly. I'm going to pick up where I did the underwriting right there, and I go, I'll give you an A, Jamie. You're an A today. So, right, I'm going to get to it. I say, so you're the youngest and healthiest. I'm going to see you at 50. Today's the day we're going to do the application, because the longer you wait, the more it costs and the more health conditions, and it might get too expensive and you can't afford it, or you don't even qualify. So I'm already going there. I'm already leading them up to it. And I'm saying, okay, there are 4 ways we die, Brad Allen: natural, homicide, suicide, accident. Jamie, you only have a torvastatin or rosuvastatin, whatever, and a blood pressure med, and that's about it. Well, the reality is, an accidental death, a death not caused or not attributed to disease or infirmity, that's echo Fay, right? So you're most likely to die by accident. So when I do that accidental rider of half coverage, I'm already showing them the value of that, because the likelihood for where they're at. That's how I do it.
Sure. No, I like that. And just to give you guys another perspective, you say things like, hey, here's what most people in your situation would do. For me, I kind of take the advantage of the fact that I'm a little bit younger. I'm 28. I'm sitting with a lot of people who are 50, 60, 70 years old. So I say, hey, here's what most people would do. Hey, here's what I would tell my own parents to do. So now I take it from the $300,000 mortgage that's going to cost him, $350 a month. And I say, hey, listen, if you were my own dad, here's the direction that I would point you. I would say, realistically, you said that your kids probably aren't going to want to keep the house. They're probably going to want to sell it. So we don't really need a full $350,000 of insurance, because that's going to make it so you can't have fun with the discretionary money you have left over. No one wants to be insurance poor. So instead, what most people in your situation would do is they would pay off half the mortgage, or they would leave behind a year or 2, 3 years worth of mortgage payments, so that your kids have time, your wife has time to figure it out, time to mourn, time to get the place cleaned up, cleaned out, listed, sold, time to make decisions to be able to protect that equity. And you can see why that would be valuable, right? And you say things like that, the trial close, and now you get the client to now agree to, hey, yeah, you're right, a full mortgage payoff probably is not the best idea. And now, because some people, they'll just show them equity protection and they're expecting you to show them a 350 payoff. And they go, hey, here's a $30,000 American Eagle. And the client's just kind of dumbfounded, like what is that? That's not going to do anything for me. But it's like, I think the key that a lot of people miss is, before you show the options, you have to pitch the concept. You have to get them to buy into the concept of what the plan is going to do, buy into the solution of what the plan can do for them. And now, if they see the value in the solution, how you structure it around the money, it's all secondary. So hopefully that makes sense. Adam, what other in-home tips do you maybe have? How do you take control when you have somebody who's maybe sitting across the table with their arms crossed? How do you get them to uncross their arms?
All right. So I want to, just before I go there, I want to see, you said something really important about your pitch and my pitch. Here's the secondary one. I say, I do my arm. I said, your mortgage is decreasing down to 0, right? And you're only 50. You're not 80, right? You're likely to live pretty long and strong for the next 15 years. So let's cut the middle, because you're going to cross that line and have even more coverage. So that's what I've learned to do.
Can you,
that make sense?
Before we move on to what I asked, can you explain what cutting the middle means for someone who doesn't understand?
So where my elbow is, down to my fingertips, that loan is decreasing over 30 years, right? And that makes sense, right?
Yeah.
All I'm doing is doing a policy that's going to cut that middle and I'm trying to do it on camera. So it's even more money. Well, crap. It's not doing it. So down, and then I'm cutting across that loan line to have even more money with the level policies. See how I'm crossing the lines? The relationship, it makes sense, right? That way 150,000 is probably going to be a yes.
So now
you don't need 300, because 300 is too expensive. They're already overinsured.
So you show somebody they wanted 350, but you show them 150 instead, and you say, hey, listen, the most likely cause of death if something were to happen to you in the next 15 years, it's probably an accident.
Yeah.
And if it's an accident, the house is paid off with the accidental rider. If it's not an accident, most likely it's going to be 15 years plus. And if it's 15 years plus, you're actually going to come out with a bigger policy than what's owed on the mortgage.
And let's say they get stinky with you. Then I'll say, you know what? We can change the coverage and all of that later. But it's kind of like, you ever been to a club, buddy? Right? The red velvet rope, right? You got to get in, and that's we're trying to get you in first. But if we don't get you in, there's no way we can mix and match and change it. You got to get into the club, which means we got to do an application, and there's zero to think of. Here we go. I said there's zero to think about, Brad Allen, unless they approve you. And the only way to do that is the right application. That's it. That's where I went from Ruby to Emerald, right there. Depersonalize it, because I was personalizing it. I said, let's just see what they say. Take you out of it, because they think you're the company. You're not. You're the middle person. We want to see if they're going to get approved. And I said, if you do, they'll pull a premium, that money is enforced, and it goes with you. Let's see.
Okay. So now let's come back to my question from before. You've got husband, wife sitting down at the table. Husband's got his arms crossed. Wife is super into it. For me, I always notice that if I can't get the husband's arms uncrossed, or the wife, I've seen it both ways, I'm not getting that sale. I'm getting to think about it at the end. What do you do to get him to disarm?
Well, I said, you already gave me permission to be totally honest with you, right? I'll look and I'll say, Jen, do you love her?
Yeah, of course.
Jim, do you love her?
Yeah.
When we looked at the financial inventory, when you're gone, she can't make the bills and she's gonna have to move. Is that what you want?
No.
Okay, then let's put something in place with some coverage. Bridge her, give her some time. Right? Now, let's say people could care less, that, the selfish ones. I don't care about any legacy. I don't care about myself. I said, you know what? I said, is your body going to break down over time? And you're going to need disability protection, right? Do you want to stay where you are? Okay, then let's at least do that. So stop talking about death and go right to disability. Hey, that's what I do. I go right to the disability side, man. Okay, great. What happened? Well, I have work life insurance. And I go, oh, great. I said, this is great. Here are the pros, right? It's cheap. Everyone gets it. You get a certificate. I said, here are the cons. And I said, I ran companies. I said, nobody's read the policy except the HR benefit specialist, and that's not you. I said, I'll say the lowest bidder gets the bid. And what happens with the lowest bidder? That's right. The least amount of guarantees. I said, unless you die at work, and you don't live there 24/7, 365, it ain't going to pay out, right? And then when you leave, you give the keys back. It's like a leased vehicle, Brad Allen. I said, it's not bad, but it's secondary. What this is primary. Do you like guarantees? They're going to pay out 100%. Yes. Then that's why we do what we do, the A+ rated carriers. Well, I have AAA. I said, great, that's secondary. I said, oh, well, I already have that. I already have taken care of, right? I said, great, let's review your policies. Have you even read them? Because no one really reads them. No. I said, okay, let's go see him. So let's get him out. We look, and I go, did you see right here that the price goes from $200 to $5,000 a month when you're 75? Is that affordable?
No, I had no idea.
Is that affordable to you?
No.
Okay. Well, then let's put something in that's permanent, or whatever we're going to do. Longer term, permanent, IUL. Let's do something so you don't have to be in that. I call it the stair step. They repeg you and then they repeg you. And I say like this, the Ryan's cross. I say, they're going to keep increasing the premiums, right? And decreasing the coverage until those lines cross. And now you have nothing. You've paid in all that money. They've gotten you money. And when you need it, you got nothing.
Don't want that.
I don't know. This is the stuff that I figured out to try, and it seems to work when I remember to do it.
So I think this would be a good last thing for you to talk about. What is your closing line? So you show them the options, your 3 options, 4 options, 1 option close. You can tell us how you do it, but what's the closing line? For Andrew Taylor, it was, if we don't even know if you could qualify, but if you could qualify, which one of these makes the most sense? Pick one. So for you,
I
what's the
do
closing line?
I do the 3 options, but only if they're like teetering. I pretty much go with the one option I feel is best because I act like the physician. Like I'm sitting with the patient. I'm not, but I act like it. So to keep in control is like, hey, this one's really good for, by the time we get to the end, I'm already on the buddy stuff talking. Hey, good job. See, they approved you. I'm summarizing right now. Look, now you're covered, man. I keep it simple. I don't have this like, earth shattering moment.
All right. I love it. Well, we're going to have some people start dropping some questions here in the chat for a Q&A. I guess while they're doing that, any last tips on maybe how you shore up the sale? We talked about minimizing chargebacks. You talked about the life cycle of a policy, the idea of conservation. What does that cycle of a policy look like for you? If you could give us a sneak peek into that from the moment you sell it to, trying to conserve it.
So Brad Allen, take a picture, text it to them, and I have a message that says, congratulations. And little emojis, icons, and if it has iPhone, it's confetti. And then I send them, I'll read it to you. Yeah, let me find one real quick. All right, let me find one real quick here. I'll just read it out. Oh, come on. All right, I said, kindly keep this picture and add it to your contacts as insurance guy Adam, and have him read it. So that when you die or to become disabled, your family can focus on family, and I will focus on finances, Brad Allen, with getting your family the death and or living benefit from the mortgage protection policy. Kindly remember, this bill is your most important bill, as this is the only bill that pays all your other bills, Brad Allen. I said, again, congratulations. And I say at the bottom, I say referrals with your loved ones, neighbors, or colleagues are the greatest compliment to me. That's Darren Gantz. So that's how I try to, like, as Brad said, tie it down at a training, right? If they call me, okay, maybe I try to talk them off the ledge about canceling, right? Because I said, hey, you're approved now, right? Or we'll revisit it later with them. But yeah, I think Sean Mike said it, 30% of our business falls off in 13 months. So that's just accept it, right? Just accept the reality. And no matter how good or whatever we're doing, right? But what I try to do is keep that 15% or less of discretionary money in the policy, in the premium of what's left over in their budget. Because I said, if we do too higher than that, we need to talk about it. But if we can go higher than that, you're more likely to cancel. And what do you look at when things get tight? You look at what most likely life insurance. So we can always change it later. I said, you're probably going to get a raise, right? Circumstances change. Groceries are up. Let's just get it here. Let's get you in the gate. So, and then if they miss a payment, it's a friendly text, whatever. America does that, right? You send a daily email. Anyone get those, right? Hey, insufficient funds, we're going to redraft in 5 days. Well, that's the opportunity because, hey, it's a friendly reminder just so you know, or whatever. So that's something else that I'll do.
All right. First question from John. What habits do you think somebody needs to develop or change to become an Emerald producer?
If you don't have enough lead flow, you don't have enough shots on goal, man. Bottom line. If you're not sitting with, 40, you're not doing 40 appointments, right? And you're not sitting with at least 25 and closing almost half of them, right? Because here's the bottom line. Why is mortgage better? Average premium with mortgage is $100+ a month. Average premium with final expense is $50 a month. Do the math, right? Mortgage is better, but because you can leverage a house because they have a house to lose. So that's what I have. I have leverage in the home. So then you get this and you get final expense. You got no leverage, man. But when I say with the home, I got leverage because someone needs to live there. So hopefully I hit that as close as I could. I'm trying to see the question. Oh, Emerald producer.
Yeah.
It's depersonalize it. Get to the application submissions. It's more submitted applications, right? And then do the tree. You start with one branch. Then you start going out more, doing retirement, doing spouse to spouse coverage, kids. You just start getting as many apps in the home as you can get. Each home, I don't care where you are, and then get referrals.
Awesome. So if you're sitting down with the husband, wife, you're maybe doing, husband policy, wife policy, then you're finding out if they got grandkids, then you're throwing on a spousal accidental on top of that. And then you're finding out if they have anything for their retirement. Now you're potentially walking away with 3 apps with a follow-up for another 1 or 2. That's huge. Okay. Here's one from Jamie. How are you working your CRM leads? So I'm assuming back when you first started, how are you working the CRM leads? I feel overwhelmed by the amount of leads I need to work through, and I'm not anywhere close to that investment level where you're at. Were you just calling and moving on, triple dialing more than just one day to book 20 appointments, just trying to figure out what I need to do to level up my app count? Because I'm also assuming if you were spending right away $2,500 a week on CRM leads, I mean, just the number of sheer leads that you had were way more than someone who's working $500 or $1,000 a week. So I guess looking back to the beginning, how were you working those leads? How did you dial them? What did that look like?
Just dial the hell out of them. That's the bottom line. Phone burner. How many X can we do this? Follow up SMS text, follow up email, get in front of them.
So you're hitting them from multiple angles. You're not just calling, you're texting, you're emailing, you're doing whatever it takes to get a hold of them regardless. Okay.
Yeah, because I try to be the most persistent guy. And then once that initial request goes out, everyone calls them. Maybe just delay it a little bit. And once you get that flurry done and come behind it and come with a lot more respect and say, oh, I'm sorry, that was probably a bad experience here, so that they like you. And then there you go.
Okay. This one's from Joseph. 2-parter. Do you take any travel trips? Number 1. And if so, how much time before you leave for the trip would you send a mail drop out? How many leads per week would you be getting back on average? Put the numbers you're putting up. What leads would you run to work up exclusively until you're exclusively running mail drops? So I think, I know this situation because Joseph, he is in North Carolina. He's wanting to take a travel trip. Obviously he could run mail drops in his backyard if he wanted to. I would just say, your advice, you got a guy here who's submitted, 10 families a week, dozens of times at this point, but he's kind of had he'll do it for 2 weeks and then he'll have 2 weeks that are off because his CRM investment's been a little bit of a roller coaster. So if he were trying to do mail drops, whether it's a travel trip or in his backyard, what advice would you have for him? And what are average
I would say
getting back, hopefully?
Agree. So seeing the question and listening to it, I would say I run 9 counties. There's a travel trip for you. Some of my first appointments are 2 hours away. I'd say go weave out of frontier, rural, semi-urban, urban. Go all through there, right? If you're getting $1 million homes, those are hard to sell. Because if you're getting tech, IT professional engineers are my kryptonite, because they're all logic and data and no emotion. And I'm not a professor, and I'm not going to professorize this. Just not my style. So I give them to my other agents. Practice. Here you go. If you can do it, great. Practice. Here you go. Because you're going to get where I got Microsoft and Expedia and all these, Google, all around here, right? Great. And they love to fill out information. They want information. Great. You don't need that much data to make a decision. That's tough for me. I'm not a fan. You can tell. I try, but I'm not a good success rate. So, and then let's see. Mail dropout takes 10 to 15 business days for you to get leads back. I'm getting 5.5%. Industry is 0.6 to 1.5. So in my area, I'm getting 5.5%. It's rocking. It's great. I don't need to go to Florida. It's red in Florida on the CRM. Great. I got plenty to do here. So I cover more territory.
So if you got a guy like Joseph who's in North Carolina, it's dark red the entire state. And obviously all the BPL's locked out. If you were to do some mail drops, I mean, you probably imagine more than industry standard would come back.
Dude, I would do this. If I was rocking in North Carolina, no joke, right now, and they said all these counties are locked out, even with Hall of Famers, retro. I sold all kinds of retro Nashville mailers, Nashville Financial. Kitsap County, retired military, active military. Oh, yeah. Hey, Joe, what happens when you ain't coming home, dude? Retired. All these retro, 1, 2, 3, 4 years back. No one's touched that for a while.
And just to give people perspective on what a retro lead is. So a brand new mortgage lead is a new purchase or a refinance that just happened. So that means they literally just did the financing paperwork. They got the postcard in the mail. A retro is somebody who maybe did their last refinance 3 or 4 years ago, but they're getting a brand new postcard. So the difference is, this is why a retro is the most expensive. A retro is $70, $80, $90 a piece, because when that one goes to their house. It's probably the only postcard they're getting. And if they fill it out, the intent is so much higher because they're not getting bombarded with a dozen as they just are now moving into a new house or redoing their finances and they're feeling the stress. Hey, we got to settle in before we can do this. A retro, it comes in the mail 3 years later, or a year later, whatever that data is. And now you have an opportunity to respark. Like, yeah, I remember when I first moved into the house and I got blown up with those postcards. I probably should have done something, but I didn't. It was just, I didn't because I was just annoyed with the postcards. So with the retro, you're the only person. So I think that's super powerful. Okay. From Robert here, 40 appointments a week turns into how many sits and how many apps? And with all the leads you're getting, how do you follow up with the non-low hanging fruit? So
That's confusing me at the end. The non-low hanging fruit.
Yeah, I think that probably means people who aren't booking. Like, are you following up with people who don't answer the phone, or are you just moving on with new leads?
Moving on with new leads. So think about this. Okay, I'm going to settle the argument on leads. Ready? Everyone know the colors of a rainbow, right? Red hot. They want it now to all the way blue cold, right? You're going to get all that mix. Focus on red, orange, yellow in the middle part. The other ones may warm up later, try them later, but spend the time on the people that are really wanting to commit to me with you. That's what I do, right? It's a Pareto principle, right? That 20% of the leads going to give you 80% of your business. It's just the truth, right? Why chase dead ends or people that, I go for the stuff for people that are hot, like iron strike. Well, I got an appointment at 3 with somebody else and it's 12. I'm like, I'm your agent. I can do 15 carriers, 100 types of policies. And I start sharing the stuff that I can do. I said, I'm not a rookie, whatever I'm going to do. Let's do this. Or do Sean Mike here. They didn't even have a phone script. I was listening to him recently. He said, you know what? You fill this out, I'm coming over. Coming over. So there's 5:15 or 5:45. Grady Pulse, right? Shows I'm busy. Let's go over. Right? What are they going to do? Not answer? Okay, fine. What if they let you in? I mean, door knocks work really good. If I average my door knocks in the beginning, it was $70 a door knock. That's what I was making off of every door knock, $70.
Absolutely.
My best sale was like 3.5 families there.
Perfect. I love it. Okay. And 40 appointments a week turns into how many sits, how many apps? And obviously, guys, these are his numbers. Your numbers will be different. So we're going to get his numbers, but commission-based sales, guys, some people pick it up quick and some people honestly struggle. So some of y'all might book 40 appointments and you don't tie down your stuff and you're only sitting with 10 and you're selling 2. So what does it look like for you?
That's 13 to 20 apps because they're big, because it's mortgage, because I'm getting, 100, 200, sometimes $300 a premium because I'm building the value into it. So I don't have mega app counts. So I stopped doing final expense only. Here's the numbers. If this doesn't convince you, I don't know what will. I did Happy Agent and MAV leads in October, November, and I went from in the 80s and 70s to the 40s. I went to 41 and 40 families. I'm like, I'm out, dude. I'm going mortgage, man. And now I the lowest I've touched, I did 60, 70, 119, 90. And then I'm trying to hit 100 families this month. Last month. If I hit about 70, then I set the record. So here's what I want to say to you. This is all great data. It doesn't matter one bit if you don't do anything about it. So here's what I would say. There were so many people that didn't like me. They scoffed. They did all that. You know what I was going to say? Doesn't matter. Because they didn't matter to me. Doesn't matter. Even at FFL. All I did is say, I'm staying focused. I'm going to outwork you. I'm going to learn what the people are doing, and I'm just going to do what they do. And I'm going to be a taskmaster. I'm just going to get really good at that. Do that. You'll blow your records away. And everyone else is kind of like chilling out because people go like this. Like James said, they go up, they go down. Just stay flat out consistent and just keep trending up. I don't care. Add more and more. Just keep trending up. Just like the market. Now you're hitting where you never thought you were, and then just don't let up. Don't get the Disneyland effect like Grady's taught us, right? Don't. Keep doing this. You know how much time I took off my first year? None. All I went to is convention and I went to events. And you know what I'd say? I'm going to these events and I'm like, dude, I'm thinking to myself, I need to do this with team, but I'm losing money. I'm losing 5 families right now to 10. But it was about giving back, just like today. I love it. And at the end of the day, you're not here. Not a single one of you. I don't live with you. It doesn't matter. But at the end of the day, you got to live with yourself, right? We all do, right? And I want to be able to say, I gave it all in the field. Anyone here athletes? If you're not, it's cool. I don't care what you do. I'm going to leave it all on the field, man. My goal every day, so we can run all the numbers you want. My goal is to hit 10, the equivalent of 10 families in earnings every day. 5 at a minimum. So you do the math. So I came here to kick ass. I didn't come here to just play a game. This isn't a game to me. This isn't, a sport team buddy event. This is, I'm going to kick ass. It doesn't matter what people think because the scoreboard doesn't lie. So where do I want to be in a year? I'm going to ask the team. I want to ask the team, where do you want to be in a year? If you don't do anything different, you're going to get no different results, man. So who are you going to lean on to get where you want to be? You're going to talk to your friends who don't know a thing about this? Because the 5 people you hang out with the most determines they're the equal of who you are right now. Pick 5 people that are killing it and do what they do. Or lump along and blame everybody else except yourself. And I refuse to do that. See, I take rigorous responsibility. I'm just real. And I'm real in the home with people because they try to push around. And I go, you know what? At the end of the day, do you have the coverage or not, or protection? Do you really care about your family, yourself? Okay, if you don't, then I'm going to move on. I'm going to move on because there's other people that want it. And so I don't play games. This isn't, this is real to me. This is my business. I have to do well. I don't ever want to be a healthcare CEO again. You know why? I don't want to report to a board of directors that are awful. Never. Do you want to? Oh, here. If this doesn't scare you, I don't know what will. Hey, why don't you go back to what you used to do and work for your old boss? How would that be? Anyone want to do that? You want to go back to where it was? Wasn't it great? You left there. You want to stay from never going back? Then do everything what it takes with 5 people. It's not hard. Pick 5 people and do and just mimic what they do and get awesome for you. That's all I got to share.
Mic drop. Thank you, Adam. We appreciate you. Everybody, go ahead. Thank Adam in the comments. We look forward to learning more from you. And if there's anything you can ever do, just let us know. Everybody have an amazing night and look forward to seeing you put up some numbers Tuesday, Wednesday. Have a great night, guys.